Welcome to our channel on accounting lessons with worked out problems, brought to you by an experienced accounting professor with a CPA. We have videos on all topics of introductory financial accounting. Our focus is on step-by-step illustration of a problem, worked out on a whiteboard. Each topic also reviews concepts at the end if you need to brush up. Please do not forget to subscribe. The topic on owner's equity/shareholders equity is illustrated in two separate videos, namely 1. Stock issue and 2. Dividend and earnings per share. Each video will also discuss the concepts after the illustration. This first video is an illustration of accounting of various kinds of stock issue. Take a moment to review the problem description. You will find it helpful to have a printout of the problem for reference while the problem is being worked out on the whiteboard. Let us begin.
Now, illustrations for accounting for stock issue. A company can issue stock for cash, for properties, or in exchange of services. Issuing for property and exchange of services normally happen when the company is initially organized. So first example is issuing the stock for cash with a par value. We are going to go over the examples first for issuing the stock. And then we are going to go over examples over dividends, cash dividends, stock dividends, and then we are going to go over the calculation for earnings per share. So first, the company can issue stock for either cash or for a property. And then the company may have a par value or the company may not have a par value. So first we are going to see how we will account for stock issue for cash with par value. So the first example is company is issuing 150,000 shares, okay, of common stock. Is issuing for a cash price of $10 per share. And here the par value per share equals $2. So here the total cash coming into the company is 150,000 shares, each is issued for $10. So the total cash coming into the company equals 1.5 million. So, okay, understand folks? So total cash received equals 1.5 million. Now the total par value for all these 150,000 shares is 150,000 times $2, $300,000. So the remaining amount is called capital paid in excess of par. Some books call capital paid in excess of par. Some books call additional paid in capital. They all mean the same. So the additional paid in capital, this is the total cash minus the total par value, that equals 1.2 million. So how do we account for this? So here what you will do, you will debit cash. So this is your debit column and credit column. You debit cash for 1.5 million and credit common stock. If the company has a par value, only the total par value should go into the common stock account. So total par value is $300,000. So you credit common stock for $300,000. And then the additional paid in capital or capital paid in excess of par or the remaining $1.2 million. Okay, the second one, it says the company is issuing the same 100,000 shares at $10 per share. The second example under this topic, it says that there is no par value. So if there is no par value, and second example is issuing the stock for cash without the par value. entire total $1.5 million will go into the common stock, and the company will not have this account. So here, 150,000 times $10, cash is coming 1.5 million. So you will debit cash for 1.5 million and you will credit the common stock for 1.5 million. Okay, now we go into issuing the stock for a property. So here, the third example is issuing a par value stock for a property. Number third case, the company is issuing 20,000 shares are issued in exchange for a land. Okay, now the par value here equals $1 and the market value of the stock is $200,000. So the market value of the stock is $200,000. So the company is paying a value of $200,000. So these stocks have a value of $200,000 and this is what paid for the land. So the land's value is the market value of the stock given. So here, so the cost of the land equals this $200,000. So here, instead of cash, you will debit land $200,000 and then you will credit common stock. Here you have a par value. So these 20,000 shares times the $1 par value, the common stock will be credited for $20,000 and the additional paid in capital will be for the remaining $180,000. The last example is issuing the stock for land, but there is no par value. And here issuing the no par value stock for a property. So then this is no par value. Then you debit land for $200,000 and credit common stock also for $200,000. Okay.
Now we will review the concepts related to the accounting of stock issues.
Now, in the owner's equity, there are two main sections: stock and retained earnings. And you guys all know what retained earnings is. Now, under the stock account, under the stock section, there are accounts for the money directly invested by the owners or the shareholders. So here, the investors or the shareholders will buy the stock directly from the company and in exchange will give cash or other properties. So this is a transaction between the investors and the company. Now there are different types of stock. First one is the preferred stock. Here, this is called the preferred stock because the shareholders who buy preferred stock from the company will enjoy some financial priorities over common stockholders. Usually, these financial priorities are in receiving the dividends and also in other economic benefits. The second kind of stock is the common stock. The shareholders belonging to the common stock are considered to be the real owners. Why? Because they have the voting rights and they participate in the company's management and they bear the rewards and risks of ownership. Because if the company is not making any money, common stockholders will not get any dividend. Now, par value. What is a par value? A par value is a value assigned to one share of stock. In some states, a par value is mandatory. Now, some companies may not have any par value assigned. That depends upon the kind of stock and in the states they are incorporated. If the stock has a par value, any amount invested by the owner in excess of the par value will go into an account called additional paid in capital or capital paid in excess of par. So only for the companies that have the par value stock, this account will be maintained. In this video, we will use APIC in all our illustrations.
Thank you for watching. We hope we were able to help you with an understanding of the accounting for stock issues. The next video will illustrate and review the accounting of dividends and earnings per share. We have video lessons with worked out problems on all topics of financial accounting. Please do not forget to subscribe.